Bloomberg Audio Studios. Podcasts, radio, news.
Regulated assets like water, airport, and energy are held by investors on the basis that usually returns are safe and predictable. The owners of Thames Water, which serves, by the way, what, a quarter of the UK population, disproves that. And investors are risking everything. They're risking losing their investments. They've had to write off billions of pounds. And now creditors are contemplating a restructuring that would possibly impose more losses on them. So if you're the new government trying to attract a lot of investment into the country, how do you fix Thames Water so that creditors don't point to that and say, well, the UK is uninvestable? On today's show, we discuss why the tale of Thames Water has spooked foreign investors and what the government needs to do to win them back. I'm Francine Lacqua. This is In the City.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
So with me today, UK economy reporter Phil Aldrick and corporate finance reporter Abhinav Ramnarayan. Thank you both for joining us. I mean, this is kind of a crazy story because, water is meant to be boring. Utilities are meant to be predictable, and Thames Water was anything but.
Well, exactly. The whole point about the investment class that water represents is it's stable, regulated monopoly. If you put your money in, you're supposed to get guaranteed dividends. It's inflation protected. It's not meant to be a roller coaster ride. And, in this instance, the investors since 2017 for Thames Water have not seen a penny in dividends. And now certainly two of them have written off their stakes entirely. Basically, the company is now in the hands of its creditors, so the shareholding is worthless. So it's a complete disaster. But there are sort of implications more broadly for the UK as a whole, as an investment destination, because of the simple fact that this should not be happening to these regulated assets.
So is this a case study of how not to run a water utility and what exactly happened?
Well, it all comes back to debt. And we've seen this across the board in the UK. It's not just Thames Water. We've seen a bunch of private equity-owned companies from Morrison's, Asda, and so on that have struggled with a debt load at a time when interest rates have gone up at a rapid pace. They're coming back down now, of course, but the damage is done. And I think Thames Water is another such case where the previous owner, Macquarie, piled a huge amount of debt onto Thames Water's balance sheet, extracted some dividends from it, and maybe didn't quite invest as much as they should have to keep the pipes from leaking. I think they have something like a third of the water. They have like a leakage of about a third of the water that they process. So, it is. I think it's a case of financial engineering. I think there are even some echoes to the 2008 financial crisis in this particular story.
Thames is the extreme example in the water industry. You speak to people there and they do say there was management failings as well as this massive debt load that just piled up on the business.
Failings because they didn't identify the problem, or they were
just
good?
Bad managers. They just didn't run the business well. I mean, you can look at companies like Severn Trent that operationally they've been run effectively. They're also listed, so it never quite had the same amount of debt problems. But people just say that Thames was just had. Its bosses were just not particularly good.
So what was the exact role of the regulator in this?
So the head of the regulator is appointed by the government, and obviously their role is to make sure that these privatized monopolies operate as much as if it was a competitive market. So their main objective is to balance household bill levels against investment levels. And so they have to determine how much bills go up, or actually previously they've been bringing bills down. And as a result, if bills are falling, then investment levels have been not growing as much as the investors wanted. The way that the water industry works, you have the regulators who are being given incentives by government, or being effectively told by government to keep bills low. And that was the priority for them. And so as a result, investment levels were cut. So, in 2019, for example, when the water industry as a whole was saying it wanted to invest about £5 billion more than what the regulator let them invest. Now, what happened after that is you had more and more sewage spills, etc., there was a complete national outcry about the situation, and obviously penalties were then imposed on these companies. So the companies feel as though the regulator has not been fair to them by blocking the investment that was required and then penalising them when these problems due to lack of investment arose. And obviously the politicians don't want to have the nightmare of sewage spills everywhere, but they also don't want households up in arms because of rising bills. And so the water industry ended up being kind of trapped in this difficult political place. And really, it's all kind of broken now.
But why was it so leveraged? So what did they use the debt to finance?
Well, I mean, to some extent, investment, some of the necessary investment to upgrade the infrastructure. But there was a lot of dividends paid out as well. And this is one of the reasons why there's a lot of customer dissatisfaction. In fact, I think it was a big policy issue which led up to the general election earlier this year. And I do think the leverage was egregious. I think it's definitely over £15 billion, the debt on the operating company. Don't remember the exact figure, but it is a huge amount of debt for water utility, which has a monopoly over one of the biggest cities in the world to have.
So when did the trouble start?
I don't want to get too nerdy, but inflation is a big part of this because a lot of the debt issued by water utilities in the UK, the interest payments or the coupons are linked to inflation, which means that a sharp increase in inflation was really troublesome for many of these companies. The reason they do that is because water bills also rise with inflation. But bizarrely, they use two different measures of inflation, which meant that there was a mismatch between what they were paying out in terms of their debt obligations and what they were getting in terms of the water bills that customers paid.
And investors have been really badly hurt by this. Could the government have handled it better?
Well, so obviously the Labour government has inherited this problem, and they are having to deal with it. In terms of sentiment for the UK, this is not good. Labour desperately needs huge amounts of money to invest. I mean, their plans there for growth are predicated on a lot of private investment. And if you've got the safest of safe assets going bust, and then the regulator afterwards saying that your returns are not going to be particularly good, when clearly the risk premium has gone up, they're worried about what that says about the country as a whole and whether it's investable in these particularly safe sectors. And if you're going to be doing joint investment with the government effectively, which would be the green energy revolution, are they trustworthy? So this is a moment Labour has to seize, and Labour has to sort of reset the trust with these investors in some format. So it's a tricky one.
Because essentially, I mean, things have gotten so badly, right, for Thames Water, which serves, by the way, a quarter of the UK population, that they're now talking about these special measures, and so they could eventually be broken up or nationalized. So if you're an investor, you lose everything.
Absolutely. And I was saying earlier that there are shades of the 2008 financial crisis. And this is where I think, this is where I see the similarity, which is where Ofwat seems fairly preoccupied, I think, with what is right and what is wrong, as the Bank of England was back when 2008 happened. But at that point, I think we have reached a point where what is right and what is wrong is irrelevant. Now, the only question is what is best for the country as a whole. Maybe Macquarie and the current owners of Thames Water were in the wrong. Maybe they shouldn't have made all those bad management decisions. But that now pales into insignificance compared to the bigger picture, which is that Labour desperately needs investors on board. But of course, it's a political it's a political minefield in a sense.
Yeah, I was talking about the moral hazard that Mervyn King brought up right at the moment where, we needed to ditch moral hazard to make sure that there wasn't a complete social meltdown in 2007, 2008. And obviously the bank changed tack later on. But absolutely, I mean, these water companies they've got over leveraged. They've definitely abused what they had and took too much in dividends, but you can't change the past. Bygones are bygones now, and you've got to sort of move on. You can resent what has happened. You can forever hold Macquarie to account to a degree, but we need the investment.
But there was a tipping point, I think, in March, and I don't know whether it is useful to talk about it, where the investors didn't want to put an extra 500 million because they said that the regulators were looking at it wrong. So how does Labour fix this? I mean, if you want to have a blueprint saying, come and invest in my country, it's safe, and we take right decisions, does Labour change the regulators? Do they change Ofwat, the way this industry is looked at, or do they put 500 million themselves?
Everyone needs to share a bit of the pain. I think this will be what will happen. I think creditors will take a bit of pain. There will be a haircut on Thames Water debt to bring it to a more manageable level, because right now what Ofwat calls gearing, which is their measure of how indebted a regulated entity is over 80% in the case of Thames Water, and I think Ofwat recommends somewhere between 55 and 65%. So it's immensely indebted, and in order to bring that down, I think creditors will have to take a hit. But you have to walk that fine line where creditors take a hit, but not such a hit that they run away. And then customers will also have to take a hit. Bills will have to go up, but not to the extent that, you lose the electorate.
And in that situation, obviously, the shareholders are wiped out. The creditors are taking a hit after the shareholders are completely wiped out. So, I mean, in the Thames example, so there definitely is burden. There's going to have to be burden sharing. And I mean, for the politicians, the cost is political in that they'll have to let household bills rise. The investment challenge is multi-decade, right? To fix the water, you can't fix the pipes and get everything working in 5 years. That's why they have these 5-year investment horizons. And then with Thames, right now we need the investment, as Abhi was saying. If the government comes in, puts the business in special measures, then breaks it up and tries to set up new operating companies, and that whole process will take a year, possibly more, before the company is up and running properly again, or its various satellite companies and that's just going to delay the investment process. And Labour are facing in 3 or 4 or 5 years' time, when the next election is held, they're going to be judged not on whether bills came down, but on whether the sewage is not being pumped into the rivers any longer, right? And so for them, they need to show that the investment has been delivered and the infrastructure is being upgraded, and that's what they're going to be judged on, and which is very different to what the Tories believed that they were being judged on until the last couple of years, when it really blew up and it became a national outrage about it. So if you were to say politically what would be the balance to take, you would presume they would choose bills rising over another 5 years of sewage pouring into the rivers.
But Phil, so this is extremely important because the Labour government have been in charge for almost three months. They're trying to attract foreign investment, as you're saying. And so this is seen as a kind of critical test, right? How do they deal with investors? How do they deal with this fallout? And that's kind of what, investors will judge and decide whether they want to put their money in the UK or not.
Yeah, I mean, it's a big deal. I mean, there's a group, the Global Investor Forum. I forget. There's a group called.
There's always a global investment forum.
There's a group called the GIIA, and this is the issue that they're raising, is that the UK is now considered to be less investable by these huge global asset managers than the whole of Europe and the US. We're right at the bottom of the league tail. The sentiment in the UK is as low as it has been. One guy I spoke to said it was the only time it has been lower in their memory was when Jeremy Corbyn was standing to be Prime Minister, and he was going to nationalise vast swathes of the UK private sector. So the investor community is definitely concerned about what's happening in the UK. The good news is they're feeling a lot happier with the conversations they're having with the Labour government. So sentiment is improving, but it's starting from a very low place. And what happened in the regulated, as I say, these are supposed to be super safe regulated industries. Nothing, you should never get a shock, really. Now, obviously, this is partly to do with the poor management of Thames Water that they got a shock. You can't just blame it on the regulator, but certainly the regulator has been, from what the investors say, has been a problem in the water sector. So if you can't get the investment in there, the sort of trust concern just spreads.
And as you say, I mean, these are assets, I guess, airports, infrastructure, water that are meant to be, if not boring, certainly, very little loss, predictable, safe.
And you can go elsewhere in the world and you can find those assets with good returns, and they're not collapsing into administration like Thames.
Absolutely. The good news, though,
news.
The good news.
The good news.
I mean, I don't know if it's a good news, but it's a comforting thought anyway, is that investors have short memories. I mean, I've seen this time and time again in my financial reporting career. I don't think it would take a huge amount for investors to suddenly look at like a 5-6% yield from a regulated entity and be like, ooh, that looks quite good. There's a lot of anger out there right now, but I do think it is fixable.
Yeah, they say, you speak to them, they say, how do you rebuild trust? And they say, well, you can start off by giving us a better return. And that's all that needs to happen. Give a better return. I think they just do want a little bit more clarity around the regulatory framework. They do not want to go through these kind of absolutely tortuous problems that they've had with Ofwat. But that is certainly, Ofwat is the core problem here. The other regulators at the moment, they don't have concerns with. They're worried that if what's happened in Ofwat spreads to Ofgem or the Civil Aviation Authority and elsewhere, then that could be bad. But at the moment, they feel it's really just a specific Ofwat problem, it could be resolved, like you say, relatively quickly.
When more or less could this be resolved, or at least, investor memories are short.
Yeah.
I do, but we have a big budget, October 30th. Like, they're just also trying to figure out this new government and what they believe in fundamentally, right? The policies.
I mean, I'm looking at other sort of similar restructuring situations, and some of them last for years. But I suspect that I think by the end of this year, when so far we've only had draft determinations from Ofwat, so just a plan of what they might impose on the industry. So by the end of the year, we'll probably have a fleshed out plan, and if that is acceptable to investors, we could see improvements by the end of the year. If it's not acceptable to investors, then you get like a challenge, and it might go to the CMA, the Competition Markets Authority, or it might become. It
does feel like December is going to be this kind of clinch moment where either the investors are given assurances, particularly on the returns that they're going to get, and they'll be happy to put their money in, and basically the problem will slowly go away. And I think there's talks about maybe reforming Ofwat a little bit, but you can see that this issue will just retreat. If Ofwat sort of holds its line, then the water companies are threatening to take the regulator to court through another regulator, and then it'll blow up into a political issue as well, because that's the start of the new 5-year investment period. So that's going to delay the whole process. So end of the year is going to be a clinching moment.
Thank you so much for joining us, Phil and Abhinav.
Thanks, Fran.
It was an absolute pleasure. Thank you so much.
Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, and it was produced by Summer Sadi. Production support from Isabella Ward and sound design from Blake Maples. Special thanks to Philip Aldrick and Abhinav Ramnarayan. Please subscribe, rate, and review wherever you listen to podcasts.